From New York to our Bloomberg television and radio audiences worldwide, this is Balance of Power, where the world of politics meets the world of business. I'm David Weston. We're going to start, as we always do, with the markets this morning. We're going to first go to Abigail Doolittle. So, Abigail, quite an interesting day, I'd say, in the markets because China sort of drove it down, and then the banks are sort of bringing it back.
A real roller coaster on the day, David. This is the kind of day that a lot of traders live for because it's very unclear right now how it will close. At one point, we had the major averages all down more than 1.5%. Not so long ago, the Dow had actually been slightly higher. Right now, the S&P 500 sort of in middle territory, down about 0.75%. And to your point earlier today, there were fears around China tensions reigniting between President Trump and Xi. But at this point, investors perhaps looking past that because of what you were saying, the banks right now up 0.6%. And this is really pretty remarkable at the lows, down sharply, then at one point up 1.6%. This, of course, is the beaten down sector on the year, the second worst in a bad bear market, down more than 30% as yields have been falling all year. And that's true today, too. The 10-year yield down 5 basis points. That tells us bonds are rallying. So from that standpoint, the overall context has a bit of a risk-off tone. But when we bring the haven yen into the picture, the yen is actually down. So we have some mixed messages. Again, it's going to be right down to the wire. We've been talking about the range for the S&P 500 recently. That support around 2,800 was breached. The level that a lot of traders are looking at, 2775, that was actually breached, but both are holding right now. Let's see what the end of the day brings, David.
So, Abigail, when you talk about beaten down sectors, you have to talk about energy. Energy, as I understand, is getting a break, too. This seems to be the day of the beaten down sector.
Great point, David, because that caught my eye not so long ago, too. Right now, we have just two sectors higher, the banks and energy. Energy is the worst sector on the year and a huge bear market. Its worst year ever on record, but at this time getting a little bit of a bid. So some are saying the reason that we have a bounce overall, earlier it was an unconfirmed rumor that President Trump is open to the idea of a fourth stimulus bill around the coronavirus. That may actually be confirmed now. A Reuters headline, I'm not sure, but that is what some sources are saying. Some of my sources are saying is behind this rally, really helping out energy and the banks. The KBW Bank Index on the day really all over the map, at one point down 4%. Now it's actually trading sharply higher. So again, the roller coaster goes on, but those beaten down sectors, some folks are taking a look at them perhaps for the catch-up potential since they've been doing so badly on the year, David.
Okay, Abigail, thank you so much. That's Abigail Doolittle on the markets. Well, as Abigail said, President Trump has given some indication he may take some action against China coming out of the pandemic. We are joined now by Professor Lisa Cook. She is Associate Professor of Economics and International Relations at Michigan State University. She also served earlier in the Council of Economic Advisors to President Obama. So, Professor, thank you so much for being here. Give us a sense of how much it really might hurt China if, in fact, the president took some action so that, for example, they couldn't list their securities on exchanges here, or we didn't invest our federal pension plans in Chinese securities anymore.
Oh, this would be awful. This would take the trade war to a very different level, and it could just be fratricide, a mutual suicide pact. We need the influx of investment from China. We need for China to buy our debt and to sustain many pension plans around the United States. So this would be mutual self-destruction.
So as far as you can tell, because you do international relations as well as economics, is this negotiating, or is the president serious about this? He's made sounds like this before. And by the way, he's gotten some support, for example, from Marco Rubio, the senator from Florida, who said maybe we shouldn't be investing in securities in China because we don't know about the accounting system.
Well, that's a longstanding concern. I don't think that's new. Anything from China that involves data will be questioned. It's not just the accounting system. And I don't know exactly what Rubio's support actually means, but I think that this really isn't the time to heighten rhetoric. We are already in a bad position, and Americans have paid for it. American consumers have paid for the trade war so far with China. the taxes that are paid, the duties that are paid by us. And if this escalates, that will be even worse. And we don't have the money to pay. So this could again be another version of assured mutual destruction. And I actually don't know what it means with respect to negotiations, because the pattern has been that something very stark has been announced and it doesn't come to fruition. So I just don't know where this sits, honestly, and I can't read his mind, and I don't know what kind of follow-up there will be.
Well, Professor Cook, you raise a really important point about whether we can afford, so to speak, it right now. Our economy is not in great shape. That's an understatement. We got more jobless claims out of more than we thought we would, about 2.9, just under 3 million again this month. Give us a sense of where our economy is and what this sort of increasing barriers, whether it's capital flow or whether it's trade in goods, what it could do to our economy.
It could really turn what investors and others thought would be a V-shaped recovery. Now, many of us thought that wouldn't be the case from the beginning, but still, that could really turn a V-shaped recovery into something that is much flatter and much more reminiscent of the Great Depression or of this last recession that we had. And that's what we want to avoid. Anything that exacerbates a quick recovery should be avoided. Trade war would certainly do that. But this is monumental. I mean, there aren't enough adjectives to describe what is happening and the speed with which it is happening. It's great that our economy is so flexible in so many different ways. This is one of the negative outcomes of it being so flexible, but job displacements would happen with such rapidity, and folks would be out of work. Demand would fall so incredibly quickly. And what needs to be done, as Jerome Powell was pointing out yesterday, is that there's got to be help from Congress. There's got to be help from the administration. The administration has got to support it, and it has to come quickly. The speed with which the crisis has happened has to be matched by speed on the reaction side. We can't be flat-footed like we were, or Congress can't be flat-footed like it was in 2008. It hasn't been so far, but this hesitation is what caused the hesitation in 2008, 2009 is what caused the prolonged recovery, especially with respect to unemployment for states and, mainly states and local entities. So I think that really has to be paid attention to. He's not exaggerating. Powell isn't exaggerating. I think that the magnitude of this crisis has come in the last few minutes. At least I saw that the Fed is contemplating not having a June update in its outlook. And that's really stark, because that means that there's so much uncertainty that it might not be useful to do so. But I've never heard of such an announcement being made. In my lifetime, I've never heard of such an announcement being made. So that says that things are really serious, and they don't want to alarm the public. They want to get a handle on the data before they announce anything or print anything.
Yeah, so finally, Professor Cook, it's both alarming and uncertain, as you suggest. We've already appropriated $3 trillion. The Democrats in the House right now are proposing another $3 trillion. How much confidence do we have that that would really prevent some of the perhaps permanent damage to the economy that Fed Chair Powell talked about just yesterday?
Well, I think it would go some way. All of this is adding up. All of it is adding up. So one thing, for example, that it might minimize, and not prevent, but minimize, is bankruptcies. If we can keep people afloat and keep the economy afloat, so that people can buy takeout even though they're locked down, we can keep a lot of small businesses open. And that would prevent the wave of bankruptcies. If we can keep them paying rent, It would prevent a lot of mortgage defaults. If we could keep them paying their mortgages, this could prevent a lot of mortgage defaults. So I think, just making sure that the economy stays on life support is, I think, critical. Stopping right now is a death wish. It's an absolute death wish because the virus has not, we're learning too much about the virus every day. And we've got to keep learning about it. And we've got to make sure that we react in a way that is appropriate and appropriate for people to come back and to stay alive and for the economy to come back.
Okay, Professor, we really appreciate you being with us today. That's Professor Lisa Cook of Michigan State University. We have breaking news right now, even as we're talking. Mitch McConnell, the majority leader in the Senate, has said that Senator Burr will step down as chair of the Intelligence Committee. There were reports overnight that, in fact, the FBI had seized his cell phone. There are allegations that perhaps, some inquiries at least, into whether he may have had insider trading based on information he had. He denies it, but he sold some stock. So in any event, Mitch McConnell now is saying that Senator Burr will step down as chair of the Intelligence Committee. Coming up here, we're going to talk about Illinois' battle with the coronavirus. We're going to have with us Lieutenant Governor Juliana Stratton to go through exactly what Illinois is doing. That's coming up on Balance of Power on Bloomberg Television and on radio. Welcome back to Balance of Power on Bloomberg Television and Radio. I'm David Weston. It's time now for Bloomberg First Word News, and for that we go to Mark Crumpton.
David, thank you. President Trump can't get a lawsuit accusing him of illegally profiting from his Washington hotel dismissed. That's the ruling of a federal appeals court today, reversing an earlier win for the president. The attorneys general of Maryland and Washington had accused Mr. Trump of violating the Constitution's 2 emoluments clauses. The Trump International Hotel became a hotspot for lobbyists and foreign officials after it reopened in 2016, shortly before Mr. Trump was elected president. The European Commission has suspended the delivery of 10 million Chinese masks to member states and Britain after countries complained about their poor quality. Officials say the masks did not meet medical standards. The masks were purchased from a Chinese provider. The EU had planned to distribute them to healthcare workers in weekly installments over the next 6 weeks. In Germany, mixed news on the coronavirus outbreak. The country reported the highest number of new cases in 5 days. Still, the infection rate dropped below a key threshold. Chancellor Angela Merkel's government has been gradually lifting restrictions on daily life. The International Energy Agency sees the oil market improving. The IEA says demand is a little stronger than expected. Meantime, supply has been reined in by a brutal price crash. World oil production is on track to decline this month to the lowest level in 9 years. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thanks so much, Mark. Illinois has some 85,000 cases of the coronavirus. That's the third highest tally in the nation. Welcome now to the Lieutenant Governor of Illinois. She is Juliana Stratton. Thank you very much, Madam Lieutenant Governor, for joining us. Give us a sense of where the virus is right now in Illinois, and are the curves starting to taper down?
Well, we're certainly making progress here in Illinois in terms of Governor Pritzker relying on the experts and following the data and the science, took decisive action really early to try to slow the spread of COVID-19 and, of course, to an attempt to save as many lives as possible. I can say that just yesterday we had 192 deaths in a 24-hour period, which was the highest number of deaths that we have seen. And so that's why when we talk about this sort of phased-in plan for, which we call Restore Illinois, this phased-in plan, it's because we're still in the phase of trying to flatten the curve. So we have a regional approach that we are taking to make sure that we can follow the experts, follow the science, and make sure that we do this very thoughtfully and guided by science and data so that we don't sort of bow to this pressure to open too soon, but rather do so in a way that considers that we're still not out of the woods yet.
In following that science and data, as I understand it, in Illinois and elsewhere, not just Illinois, there's an indication that people of color are particularly vulnerable. We've actually spoken in the last week or so with Dick Durbin, your senior senator from Illinois, who pointed out that there's a significant issue with African Americans, but even more perhaps one with Latinos. What are you doing about that?
Well, we are absolutely seeing the disparities in the data, and I'm grateful that in our Illinois Department of Public Health, we are sharing the statistics and the data relating to health disparities. And we have also assembled a working group to specifically look at health equity issues as it relates to COVID-19. But I think it goes back to your original question about the idea of where are we and the path that we are on and why it's so important to follow the science and the data. We know that if we open too soon, then that it will be people of color that are impacted the most. It will hit our communities first. We know that some studies say that up to 80% of essential workers, of course, are of color and are not able to stay at home. They're in grocery stores, they're city workers, they're postal service employees and restaurants and, and all of these types of facilities that they are putting themselves more at risk even as a stay-at-home order exists, not to mention due to structural racism, knowing the underlying health conditions because of barriers that have been put up in communities throughout history. So I think it's really important to recognize that we have to get beyond our peak, because if we open too soon, people of color will be hit the hardest. So that's why we are being very careful about this plan, making sure that we bring an equity lens to the work that we're doing. And I have specifically am working to bring together health professionals of color, both Black and Latino, to make sure that we can think not only about our response to COVID, but what should be the action plan as we think about the recovery process to make sure that these communities, that we address the significant needs that come from the pain of this pandemic.
Finally, Madam Lieutenant General, Lieutenant Governor, this is fundamentally an issue of safety and health, but it also has fiscal repercussions for the state of Illinois and other states as well. We know there are proposals in Washington to help the states now. The Democrats have proposed a fair amount of money, $1 trillion to go to. At the same time, Illinois, whether fairly or unfairly, has become a poster child for the fact that your pension system really means that you're paying a lot of money that maybe some people think you shouldn't be paying. I want to give you an opportunity to respond to those who are saying we shouldn't be giving money to states like Illinois because you've put too much of a commitment on pensions.
Well, I'd say a few things. First of all, here in Illinois, we were on our way to fiscal stability. Last year, under Governor Pritzker, as we had this new administration, we passed a bipartisan balanced budget. We were on track to do the same thing this year. We were making investments that we needed to rebuild our hollowed-out state government. And like many states around the country, COVID-19 has set us back in that project. And so just like every other state, we need assistance because we know we now know more now than ever before how important these government services are. So we are looking to the federal government to make sure that they can provide assistance to help offset the revenues that we've lost due to COVID-19, to also cover the money that states are spending on local programs. That's something that's needed at the state level. And to just recognize that, as the federal government has also said, that there are households who have, where we have the majority of job loss. And I know today, I think we've learned of 36 million over the last 8 weeks that have applied for unemployment. We know that many of those for the federal government are mostly from homes that are making $40,000 or less. And these are working class people. These are individuals who are probably predominantly people of color. And when we think about the needs of our state as a result of this pain, we're going to need the federal government's help to meet the needs of people. The state of Illinois contributes to the federal government through the tax structure. We want to make sure that our residents, just like states all across the nation, are calling for, that we can get assistance back from the federal government to help meet the needs of our residents.
Okay, thank you so much for being with us. Really appreciate it. That is the Lieutenant Governor of the state of Illinois. She is Juliana Stratton. Coming up on Balance of Power, we're going to talk with Steve Rattner. He is a veteran, of course, of Wall Street. We're going to talk to him about what the recovery might look like and what investors should be doing. And also talk with Richard Trumka, president of the AFL-CIO, on one of his real issues, which is safety of workers as they return to work. That's coming up on Balance of Power on Bloomberg Television and on radio. Welcome back to Balance of Power on Bloomberg Television and Radio. It is time now to take a look at our stocks of the hour. Well, actually, they're ADRs, American Depository Receipts. And we're going to use Alibaba as sort of a surrogate for the larger issue involving China that we talked with earlier about with Abigail Doolittle. So, Abigail, how are the ADRs doing?
Well, they're all over the map at this point, but earlier they had been down sharply. And this is a bit of a colorful story because we have some of these China ADRs falling on the day, now recovering. This, of course, after President Trump earlier spoke about the idea of looking at those China companies listed on the NYSE or the NASDAQ that aren't using U.S. accounting rules, sort of a threat that perhaps there could be some sort of a delisting situation there. However, he came back just as quickly saying that they could easily go to London so that may not be something that we'll pursue. So it seems like it's more a case of talk rather than walk, but nonetheless, we did have some sort of a reaction for all of these ADRs. But again, some at this point, take a look at JD.com, actually flipping higher.
And how have they done on the year overall, if you take a look at them?
This is very interesting because the ADRs, the China ADRs on the year, and the Bloomberg terminal shows this well, they are actually down less than the S&P 500 or the China index itself, down just about 2%. That could have something, though, David, to do with the fact that these are some of those stay-at-home stocks, the big growth stocks. As for why President Trump may not really follow through with the little bit of an implied threat there about some sort of looking at these companies or possibly delisting them. China, of course, is the second biggest holder of U.S. treasuries, so that would be something that we certainly would not want to unleash. $1 trillion, so much so that it's hard to know whether or not there would even be a buyer if they were to try to sell, but certainly not worth investigating, David.
Yeah, the one thing's for sure, we need people buying our treasuries right now, without a doubt. Thanks so much to Abigail Doolittle for that Stock of the Hour report. Coming up here on Balance of Power, we're going to talk with Stephen Rattner. He's the chairman and CEO of Willett Advisors. He also, of course, was the U.S. Treasury advisor on the auto restructuring. He's going to be here to talk to us about a possible recovery. That's coming up on Balance of Power on Bloomberg Television and on radio. Welcome back to Balance of Power on Bloomberg Television and Radio. I'm David Weston. It is time now for First Word News, and for that we go to Mark Crumpton.
David, thank you. And as my colleague David Weston told us a short time ago, North Carolina Republican Richard Burr is stepping down as chairman of the Senate Intelligence Committee. Senator Burr is under investigation for stock trades he made ahead of the market downturn sparked by the coronavirus pandemic. Senate Majority Leader Mitch McConnell announced the move in a statement and said he agreed it was in the best interests of the committee. The Los Angeles Times reported the FBI served Senator Burr with a search warrant and seized his cell phone. We will, of course, continue to follow this story, bring you more developments as we get them. The head of the World Trade Organization is stepping down a year before his term expires. It's an unprecedented midterm resignation at the WTO that Roberto Azevedo calls, quote, a personal decision. Azevedo has faced intense pressure from President Trump, who has accused the Geneva-based trade body of having an anti-U.S. bias. The president says he doesn't want to talk to China's President Xi Jinping right now. Mr. Trump told Fox Business the two have a great relationship, but Mr. Trump said he could cut it off. The president also rejected the idea of renegotiating the Phase 1 trade deal he signed with China in January. A Chinese publication reported that Beijing might renegotiate or cancel the agreement. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thanks so much, Mark. Well, in the midst of all this gloomy economic news, some people are finding maybe some hope in, of all places, the auto industry, with U.S. automakers slated to go back to work in the United States as early as next Monday. And in Europe, we're hearing that people are returning to using their cars rather than mass transit so they can have social distancing. Welcome now someone who's a veteran of both Washington and New York, Steve Rattner. He, of course, served as President Obama's chief for his reorganizing the auto industry, and he now is chairman and CEO of Willett Advisors. They invest the private and philanthropic assets of Michael R. Bloomberg, who founded and owns our parent company. So, Steve, thank you so much for being with us. You are an astute investor. You follow these things. Do you find any real indication of maybe a recovery coming in the auto industry that might affect the economy overall?
David, I think we have to be careful not to be misled by early signs of what may seem like spring. We are going to see, and there's already a tiny little bit of evidence of a pickup in car sales from obviously an abysmally low level in the month of April. But this is all going to be relatively small potatoes compared to the distance we have to go to get back to where we were before all this started. And I am pretty pessimistic about our ability to get back to that point at any time in the immediate or imaginable future.
Well, we heard some of that pessimism, or at least realism perhaps, from the Fed chair, Jay Powell, yesterday in his remarks, where he really warned about things like mass bankruptcy and unemployment if we don't do even more in the the fiscal and the monetary side. Is there more that can and should be done to try to bring that recovery sooner?
Yes, absolutely. I am completely in agreement with Chairman Powell. Not that he needs my support for his thoughts. Look, as I said, I think the notion that we are facing a V-shaped recovery where it's all going to bounce back, car sales are going to go back to 17 million, people are going to travel and spend and go to Disney World and all those kinds of things is frankly a fantasy. This has been an enormous shock to the economic system. There's been much permanent job loss, factories that are never going to reopen, restaurants that are never going to reopen, companies that are never going to rehire back, or at least not in the foreseeable future, all the people that they have laid off. And so we do need to do more. But I think it needs to be not just providing income support to Americans who've lost their jobs and to businesses that are in danger of failing, but also we need to really rebuild America. We need to finally do something on infrastructure. We need to do something about retraining and finding jobs for the people who are not going back to their old jobs, because this whole economy is going to shift into a somewhat different focus. And so, yeah, there's an enormous amount Congress can do. The question is whether they have the will to do it.
In the meantime, we have big investors trying to decide what to do. We heard Stanley Druckenmiller and Ron Tepper yesterday saying they're very concerned about the equity markets being overly optimistic about the future. As an investor, what do you do in that environment where equities actually have bounced back a long way from the trough, frankly, and they may not be justified by the economic data?
I think many of us have been scratching our heads about the resurgence of the equity market, and we can debate the reasons for it. I think the most important reason is probably all the liquidity the Fed has pumped into the system. But nonetheless, I think what Stanley Druckenmiller and David Tepper and others have been saying makes a lot of sense in terms of being concerned about the level of the equity market. How do you hedge it? Well, the simplest thing to do is simply sell. There are then, if you for whatever reason want something more esoteric, you can do things with options. You can do things with tail risk. There are more sophisticated ways. But at the bottom line is either if you don't have a positive view about the equity market, you simply need to reduce your exposure to the equity market, give up the possible upside, and protect yourself against the downside. We still are in a world of quite efficient markets, and there are no silver bullets or magic ways to take out the downside but keep the upside.
So I guess it was Margaret Thatcher that talked about TINA, there is no alternative. Is there an alternative? I mean, you have to put your money somewhere. Is it better off under the mattress, or are there other asset classes that offer at least some solace?
I don't think there are any. Again, there's no magic bullets or simple solutions. Part of, again, why the equity markets have been so robust is because people look around and see interest rates relatively near zero and decide that's not a particularly attractive place to put their money. And you can make 2 or 3% just on the dividend yield on the S&P, so that seems pretty interesting. But then you're taking all this risk on your actual capital value. So no, there are unfortunately no secret places you can put your money. I don't think any of us feel that corporate credit, corporate bonds, things like that are particularly attractive at these levels either. And so I think the best advice I would give would be a mix of some equity exposure so that if, in fact, it turns out these levels of the stock market make some sense, you can participate in it with good companies, combined with maintaining a very low level of leverage, if any at all, and a high amount of a cash balance on which you should not expect to earn any interest, but you're not going to lose any money.
And what about cross-border exposure? There's a lot of talk now that supply chains may never be the same. Certainly there's a lot of focus on China right now, with the president really certainly rattling a saber about China. Does that indicate that you're better off with more domestic exposure and not as exposed to globalization?
We have to see how that unfolds. There's certainly a lot of talk by the president, but frankly with the president it's mostly talk. There's some talk among CEOs, and that we should pay close attention to. I think we've all learned a lesson here about long supply chains. But as we look around the world as investors, we find Europe exceedingly uninteresting. They have huge structural problems. Their companies are not the companies that are most likely to do well in a post-COVID environment. There are a lot of old economy industrial companies. China has done and is continuing to do amazingly well, both in terms of keeping the virus under control, but in getting people back to work and in getting their economy going again. And the biggest risk in China is the one that you identified, which is essentially, will they have customers, either because the economies elsewhere are not in great shape or because the supply lines are too long. We'll have to see how that unfolds. But we have been, before all this, and continue to be, as an economic matter, not as a political matter, not as any other matter of that sort, but as a purely economic matter, we continue to find China very interesting as investors and are disproportionately invested there.
Is the big issue right now for the United States and maybe for the globe demand? I mean, we hear about things like demand destruction or a doom loop. Is that what you believe Chairman Powell was talking about when he said there could be really long-term, maybe even permanent damage to the economy? Are we in danger of permanently destroying demand?
I think we have a problem on both the supply and the demand side. We clearly have a problem on the demand side when you have what is effectively, when you make the right adjustments and things, probably 25% of Americans out of work, getting their unemployment insurance, but not their real wages, and with huge uncertainty, since the unemployment insurance does expire, the extra $600 after 8 weeks, obviously people are going to spend less. And of course, when they're essentially trapped in their houses, they're going to spend less, and you see that in the consumer spending data. But we also have a problem on the other side, which is that we are seeing factories closing for good. When I talk to CEOs, they tell me almost universally, we are not going to bring back everybody that used to work here. We're not sure we will have the demand for that. We're cutting our CapEx budgets to be more in line with what we think the economy is going to do in the future. That obviously has negative reverberations through the economy when capital expenditures are cut. And so I don't think we're in a doom loop where we're going to go into some kind of depression. But I think the climb out of this is going to be much slower, much more difficult than people might have thought even a few weeks ago, and maybe some people even think today. And so therefore, I do think there's enormous scope for the government to help if it's in a mood to, and it's not something it's been particularly good at for a good while, but we'll see. Maybe it'll be different this time.
Steve, thank you so much for joining us today. Really appreciate that. Steve Rattner, he is chairman and CEO of Willett Advisors. And a program note now, at 6 p.m. tomorrow evening Eastern Time, we're going to have Wall Street Week, and we're going to be going over many of the issues we just talked about with Steve Rattner. That's coming up on Wall Street Week tomorrow. That starts Friday at 6 p.m. Eastern Time. Coming up here, we're going to be talking with the president of the AFL-CIO, Richard Trumka. He's been very vocal about the need to protect workers as they go back to work. We're going to talk to him about any progress he's making on that front. This is Balance of Power on Bloomberg Television and on radio. Welcome back to Balance of Power on Bloomberg Television and Radio. I'm David Weston. Well, the AFL-CIO represents more than 12.5 million workers. On behalf of those workers, as well as the other workers across the country, its president, Richard Trumka, has been campaigning for a federal standard, a safety standard tied to coronavirus as people start to come back to work. We welcome now Mr. Trumka back to Bloomberg. So, Richard, I have not read the entire proposal from Nancy Pelosi. Did you get that standard in there?
The standard is in there under OSHA. We're still fighting under MSHA, which would be the mining side. It is there. There's money there for personal protective equipment. There's money there for a number of other things to protect workers. And so we were successful in getting that in the bill so far.
So give us a sense, you know Washington so well, what are the chances actually something reasonably soon will be passed along the lines of what the Democrats are proposing? Because the Republicans are saying it's time to slow down.
Well, it isn't time to slow down. If you look at, there were another 3 million Americans filed jobless claims this week. When you put them together, that's 36 million have lost their jobs over the last 8 weeks. 7 million had already been out of work. So that makes it 43 million. And then there's studies that show that for every 10 people, David, that successfully file for unemployment, 3 or 4 more don't. So we're looking at nearly 50 million people out of work. We're looking at the economy hurting. Figures just came out today that there was a 40% decrease in household credit card spending in March alone. All of those things indicate to something that big needed to be done and bold needed to be done. This bill is big and bold, and it will get us back on track. It should be passed immediately. Most of the things in this bill have already been agreed to in the past. This is an extension of them.
So Richard, give us a sense of how your members are doing, because one of the things that really stunned a lot of us was Chairman Powell yesterday, Federal Reserve Chairman, saying that of people earning $40,000 or less, 40% of those people are out of work. How many of those people are people you represent?
A significant number of the people we represent. This attack, unlike previous recessions, went straight for the people at the bottom first, in hospitality, in leisure, in a number of other things just like that. And so the lower wage people got hit the first, and it's going up the chain. It's now affecting every wage group and every educational group, but mostly those people at the bottom. And they're struggling. And then the people that are still at work are struggling in another way. Those that are essential employers are struggling because they fear for their health and well-being because they don't have proper protective equipment. The labor movement has donated proper protective equipment to nurses, doctors, transport workers, everybody along the line because they couldn't get it furnished properly. So that is another problem that they have. And then there's the issue of testing. We still have a problem with not enough testing going on, so that workers that are on the job still fear for their health and safety. On the subject of the personal protective equipment, and for that matter, getting back to work generally, we have something of a patchwork. Maybe that's a good thing across the country with different states taking different approaches. Are there some states that you're seeing that you think, boy, that is a reasonable approach that will protect the workers along the lines of what we need? Well, you know, it's a combination of approaches, and I think most people, most governors, most even business people that I've talked to agree on the approach. One, you have to go back slowly. Two, you have to do all the social distancing. You have to give personal protective equipment to everybody that's out there, so that you aren't getting sick and then spreading it everywhere. And you have to do proper testing. Those are the things that we called about. That's why it was so important to have a standard at the federal level, so that every employer knows exactly what's required of them. And this standard would do that. It would help everybody. The employers would they would know what to do. They would have to educate their employees, and then they would have to provide them with proper protective equipment. All of those things put together can help us get the economy back and running. If you take any of those out of the mix, then the economy will false start. People will go back, more infections will occur, and you'll have to close it down again. That's what we saw happen in some of the slaughterhouses that were out there.
Richard, finally, the $3 trillion proposal right now includes another $1,200, I understand it, payment. Is that going to be enough? Are you in favor of something like a universal guaranteed income for at least some period of time, 6 months or something?
I do favor that because I think it would help the economy stay in place at least. Look, 50 million people out of work is devastating to any economy, and it would help buffer that, so that people could stay in the consuming market. They could help create demand that your last guest talked about there not being. Right. The $1,200.
Richard, sorry, we're going to go to President Trump now at the White House.
We're doing very well in the numbers, and I'm going to have Kayleigh say a couple of words. Kayleigh, please.
Hi there. I just wanted to outline our pandemic preparedness. The Obama-Biden plan that has been referenced was insufficient, wasn't going to work. So what our administration did under the leadership of President Trump is do an entire 2018 pandemic preparedness report. Beyond that, we did a whole exercise on pandemic preparedness in August of last year and had an entire after-action report put together. In other words, the Obama-Biden paper packet was superseded by a President Trump-style pandemic preparedness response plan.
Which was much better, which was much more complete, and which was a lot tougher. We were given very little when we came into this administration, and they've done a fantastic job. And I think we're going to have a vaccine by the end of the year. And I think distribution will take place almost simultaneously because we've geared up the military, and you'll see that tomorrow. All right, anything else, Kelly?
We'll have a full update tomorrow for you guys at the briefing, line by line, of how prepared we were for this pandemic, thanks to the leadership of President Trump.
Thank you. And Alex, you're going with us.
Yep. Do you want me to talk about our...
Sure.
Yeah. So, you know, Dr. Bright is up there testifying today. Everything he's complaining about was achieved. Everything he talked about was done. He says he talked about the need for respirators. We procured respirators under the president's direction. He said we need a Manhattan Project for vaccines. This president initiates a vaccine Manhattan Project, diagnostic Manhattan Project, therapeutic Manhattan Project. Oh, and by the way, whose job was it to actually lead the development of vaccines? Dr. Bright. So while we're launching Operation Warp Speed, he's not showing up for work to be part of that. So this is like somebody who was in a choir and is now trying to say he was a soloist back then. What he was saying is what every single member of this administration and the president was saying. We need more personal protective equipment. We need more ventilators. We need therapeutics. We need vaccines. Every single thing this president was on, this president achieved. And Dr. Bright was part of a team and was simply saying what everybody else at the White House and at HHS was saying. Not one bit of difference. And on hydroxychloroquine, Dr. Bright literally signed the application for FDA authorization of it. Literally, he's the sponsor of it. So his allegations do not hold water. They do not hold water.
So we have had some great response in terms of doctors writing letters and people calling on the hydroxychloroquine. And this guy's fighting it. No reason to fight it. There's no reason. But more importantly than that, we've had tremendous response to the hydroxy. We've had the great response to zinc along with it and the Z-Pack. So a lot of people have sworn by it, and we'll see. But I'll tell you what, to me, I watched this guy for a little while this morning. To me, he's nothing more than a really disgruntled, unhappy person. And I'm not just talking about Alex, because Alex said it strongly, but there are a lot of people that do not like the job he did. I don't know him. I never met him. I don't want to meet him, but I watched him, and he looks like an angry, disgruntled employee who, frankly, according to some people, didn't do a very good job. All right, any other questions? Who is stepping? He announced he's stepping down? I didn't know that, no. No, I never have. No, I didn't know. When did he announce he's stepping down? I know nothing about it. Nothing about it. No, I never discussed it with anybody. That's too bad. That's too bad. Go ahead. We'll see. We'll see. We got a lot of things going with China. We're not happy about China, I will tell you that. The ink wasn't dry on a great trade deal, and all of a sudden, the plague comes in from China. We're not happy about it. I'm okay with it. I'm okay with it. The if you look at the world trade, not only the World Health, and we'll be making an announcement on the World Health Organization shortly, soon, probably next week sometime. But the World Trade Organization is horrible. We've been treated very badly. I've been saying it for a long time, and we act on it. When I talk, we act on it. The World Trade, they treat China as a developing nation. Therefore, China gets a lot of the benefits that the U.S. doesn't get. They have other countries that are developing nations. And the people sitting in the Oval Office should never have let that happen. I'm going to Pennsylvania, yes. I don't know how they're counting. I never discussed it with them. Death is death. We don't want people dying in this country. And we've done a great job. We've done a great job. I'll tell you what we've done on ventilators and what we've done on testing, except the press doesn't write it that way because you have all this fake news. But what we've done on testing, we've now tested more than the entire world put together. The entire world put together, we have many more tests than they do, and better tests. And the reason we have more cases is because we have more testing. We've done a great job, and the people, the men and women that have done this great job should be acknowledged by the press. I can't hear a word you're saying. Go ahead. I can't hear.
We've been listening to President Donald Trump appearing with his HHS Secretary Alex Azar as well as Dr. Birx at the White House as he was going onto a helicopter. And basically they were addressing Dr. Rick Bright, who used to be the head of BARDA, a very senior organization in the HHS, defending what the administration has done against Mr. Bright, who was actually giving testimony today up on Capitol Hill. And that does it today for Balance of Power on Bloomberg Television, and we're going to continue for the second hour over on radio. I'm David Weston, and this is Bloomberg.